Welcome to Trade Pro. In this video, I'm going to show you how to utilize stop loss hunts to get perfect entries and great risk to reward ratio trading setups on a 1 minute time frame. So let's talk about this. I'll go through 17 different individual examples in a row. So I'm not cherry picking one specific setup or only choosing a trending market condition. This goes through ranging, trending, big ranging period, and another trending period. So we can go through all these examples one by one all in a row and talk about how this can get you really great entries and give you a great risk to reward ratio. Now, let's zoom in on the first example and go through these one by one. All right, so let's start out by covering the indicators that I'm using here for this strategy setup. First, I have two exponential moving averages. There's one in white, which is a 200 period exponential moving average, as you can see here, and one in yellow, which is a 50 period exponential moving average. Next, I have a stochastic, and this I have only kept the %D line, the upper band, and the lower band. So middle band is gone and the K line is gone. These are the settings for the stochastic. All of these indicators can be found in the public library. So this is a standard stochastic indicator, as you can see here. And for the EMAs, or exponential moving averages, you can type in EMA and it'll come up with moving average exponential. I'm using 2. So the purpose of these exponential moving averages is the trend direction. So if the yellow line is under white line, then the idea is to only look for short positions. If the yellow line is over the white line, only going to be looking for long positions. Now, stochastic is going to be used for identifying the stop loss hunt levels. So this is where we're getting more into the strategy itself. So let's talk about how this is going to identify stop loss hunt levels. And I'm going to go through 17 examples in a row and talk about this strategy so it all makes sense. So if it doesn't make sense right away on the first example, just hang in there because there are plenty of examples. All right, so zoomed in now, let's talk about how the stochastic is going to find us the stop loss hunt levels in an objective way. There are other ways to do this, but this is an objective approach that is going to make things a lot easier, especially for traders who have not so much experience in the markets and maybe haven't fully learned to control their emotions yet when making decisions. So this makes the decision for you, so you don't have to worry about that. Now, let's talk about exactly how this is going to identify significant levels, and I have put in these colored boxes where the significant levels are that get triggered in for a position according to this strategy. So enough talking, let's get into the actual strategy. So what we're going to be looking for is with the stochastic, if price is in an uptrend, which means yellow line is over white line, 50 EMA over 200 EMA, then we want to look to when the stochastic goes into the oversold territory. Then after going into the oversold, comes into the overbought. So an example of that is right here. And then it comes up into the overbought. Another example of that is right here. Then it comes up into the overbought right here. So we can mark out significant lows for stop hunt levels. So we get one there and we have one right here. So these lows are significant stop hunt levels where we can potentially have an entry. This one we do not see get swept by price, but we get another one right here on this pullback. And this one we do have a sweep of this low, which is the stop hunt that we're going to be anticipating. Okay, so we can see this significant level. We mark it out with this green box just to make things very clear. Price comes up, drops back down while in an uptrend with yellow over white. So we're looking for a long, sweeps that low, and that is an entry. That's the entry criteria. So there's a couple ways that you can do the entry. One is you can do a multi-stage entry where the first entry is right below that low. So anticipating just a quick wick below, not much movement below it, and then a quick rebound above just to catch that quick wick there like it would have in this instance. That would be a limit order is what I'm talking about. And then you can kind of stage your limit orders at increments, and those increments are up to you. What I'd recommend is looking through a bunch of examples of this setup, which I'm going to show you here in this video as well. So hang in there. It's going to be a longer video. I'm going through all 17 examples. But this is important. This strategy is actually incredibly helpful for especially traders who haven't quite figured out this type of thing yet. So let's kind of talk about this multi-stage entry a little bit more, but I do want you to think about it yourself as well, and kind of look through plenty of examples so you can come up with a good entry strategy yourself, as well as a stop loss strategy. But I'll give some hints along the way with entry, stop loss, and take profit as well. So entry, multi-stage, a good way to do it would be kind of stepping it in. So we have the first entry just below that level, right at the stop point level. You can do it every 1/2 ATR. So if you want to put on your ATR levels, so 0.5 ATR below the low, 1 ATR below the low, and then if you want to go farther, you could go 1.5 times the ATR, 2 times the ATR, but at that point, stop loss is going to kind of start being a bit more of a thing there. So maybe stop loss at 3 times ATR, 2 times ATR. Probably wouldn't go farther than 3 myself. And at that point, it's, we got to worry about our take profit and moving our stop loss to break even to protect our profit, or taking a multi-stage take profit. You can do this in a couple ways, but you can look to different levels. So for instance, we have this pullback here where there may be stop loss resting. So we may see a push up to that level. That could be a first target where you take partial profits, then the high before the pullback began, and you could have another target beyond that if you wish. All right. So the idea is to have a great risk to reward ratio here of at least 1 to 2, and it's very easy to achieve that. You'd actually have a very wide stop loss if you were to do 1 to 2. It would look like this, which I think is a bit too much. I'd rather go for 1 to 3 at least on this type of setup. All right. So let's move on to another example. We're going to get through a bunch here, so I don't want to take too much time on each individual example. That first one is going to take the longest, but let's talk about this setup now. So this is the next one that occurs. So we see that this time we have 50 period exponential moving average, and it's under our 200. So we're only looking for a short. So what we want to see is the stochastic come into that overbought. So this time our significant highs are where we're going to be looking for that stop loss hunt. And we can identify the significant high by the last time when the stochastic was in overbought, then came all the way back down into oversold. All right. So that happened here at this high, then came down to oversold on this push down. So now we're looking for this high to be swept before price continues in our favor, because we're looking for a short. We're looking for this trend to continue to the downside. And we do get that. So we have this push up, sweeps the high right here. And as I was talking about earlier, you could do a multi-stage entry or you could just enter it right at the level. But sometimes you may see price push a bit higher. So maybe you want to do a multi-stage entry. As I said, do your due diligence here and look at a bunch of these so you can determine what's the best way to do it. And for take profit, as I was saying before, you can look to different levels. So you can move your stop loss to break even here at this level, this significant low. You could then also take partial profits, stop loss to break even, partial profits here, partial profits at this low over here, then the low point before this overall pullback here. Over here, you could take more profit or close your position, or you can take more down here as well. You can do it how you deem to be the best way based on what you notice about these setups. Okay, so definitely look through plenty of examples as I've been saying. so that you can determine the best way to do this. But this is a very valuable thing that I'm showing here. So it's something that I want everyone to look into and look at a bunch of examples on their own. So let's move on now to our next example. And again, still in a downtrend with our yellow under the white. So we have our next opportunity to look for this high to be swept. And why is it this high that we want to see swept for stop losses? Well, let's take a look at our stochastic. Comes into overbought, back to oversold. All right. So this is a high that we're looking at now. Okay, this is a significant high. We want to see price sweep this, and that is where we're going to be looking to get short once price has swept this high. So we see that happen right here. So we can be entering anywhere in between, right above this high, and whatever we deem is kind of our method of getting in. So if it's a multi-stage, that's fine. And you can place your stop loss 2 times ATR, 3 times ATR, whatever you decide is going to be the best way to do it based on your testing of this type of strategy, okay? And so we see this push down, and it doesn't take out the lows all the way over here. So why was I talking earlier in those other setups about taking partial profits and moving the stop loss to break even? Because we're not always going to get a full follow through for the entire trend continuation move. So different levels you can look at for partial profit taking and moving the stop loss to break even. Just simple lows, higher lows that were going up before this started pushing down are good levels you can look for to take partial profits, okay? So you'd have a few points where you could take profit on this one and get the stop loss to break even. All right, so let's move on to another example here, the next one. And this is one that does not work out, okay? So we see that this actually comes over the yellow, or the yellow comes over the white, I should say, 50 over 200, so we're only looking for a long at this point. And we have a significant low to look for a stop loss hunt, okay? Right? So this one pushes up, overbought. So this is precisely that low right here, but that was in the downtrend. We're looking for the lowest point on this specific pullback, right? Okay, that makes sense. Lowest point on this specific pullback to look for stop losses. Okay, comes up, we see that the trend flips bullish, so we can actually be looking for a long. That's why we look for this long below this low. It comes down and it fails. Okay, so that one's a failed. We move on. Yellow comes under the white. Our next example here, another successful one. We see that we're only looking for a short position now. So how do we spot our significant point to look for the stop hunt? Well, overbought here, stochastic, pushes to oversold. Okay, so now this is our level of interest. Got it? We see that come up, and I've marked it with red above this high. This is our level of interest for a stop loss hunt to get short and look for a continuation down. And that entry could be done right above it. It could be done multi-stage, as I said earlier. And stop loss, again, something like 2-3 times ATR is okay. But as I said, do your due diligence and figure that out. But this one, nonetheless, provides a fantastic risk to reward ratio and plenty of opportunity to take partial profits along the way. All right, so let's move on. Still another short setup. This one does not work out, although one could argue it gives you an opportunity to get your stop loss to break even. I won't try to argue whether or not that's the case, as everyone's going to do it differently. But we get the sweep of this high. Why is this a significant high? Well, we see that on this push up, overbought. Then we see oversold. So this overbought push to the upside within a downtrend. Shows yellow's under white. Okay. Pushes up, takes out this high, stop loss swept, that could be an entry. Pushes down, but we don't get all that much of a follow through to the downside. So this one could be considered a loss, could be considered a break even, depending on the person and the way that you're doing it. Okay. So we're just going to say that is a loss. Could be a win, could be a loss, could be a break even, but we'll call it a loss here. Okay. Here's another one. So we get into an uptrend. Yellow is over white. This is the next example. So why is this a significant low? Oversold stochastic, pushes over bought, makes it our significant low here. So we're now looking for a sweep of this low right here. Okay, this one right here, looking for a sweep there. And we get this green box here kind of to highlight that area where it's a buying opportunity. And this whole area is a buying opportunity down here. And of course, you do stop loss how you deem fit. You could look for highs to be taken out before the pullback. Can look for a continuation move. It's a really strong uptrend. This video is about getting these precise entries, less about the exact stop loss strategy or entry method or take profit system. But I'm just talking about multiple ways that it can be done so you can have ideas to test out. Okay. But these precise entries are possible. This one's not as precise as a lot of the other examples though. But we do see this coming down here with a pretty small move where you can get in and then have a good risk to reward ratio to look for continuation up. Our next example, why is this our significant low? To look for a stop sweep here to enter long. This is the one to look for the sweep on. Why is it? Because our stochastic is here, oversold, then pushes over bought. That makes it our interest level, okay? Stop loss sweep happens right here. We can enter long on that, look for continuation, get a good risk to reward ratio, take profit how you want to, use stop loss how you want to based on what you have figured out is a good way to do it. So successful on that. And then we move on. Okay, so there are no sweeps here yet. So we're actually waiting for the next one, and that occurs here. So why is this our level? Well, we see comes oversold, I should say, in an uptrend. And then we see it come into overbought all the way over here. So this becomes our valid low. But at the point that it comes into overbought over here, this is the lowest point of this overall pullback. So this is our low to look for that sweep. Okay, makes sense, hopefully. We see that sweep occur right here. So we have our entry in this area. We get a few wicks through there, just quick wicks. So that's why we have limit orders to get in. So you don't have to do a whole lot of thinking about this. You just place your limit orders, waiting for this sweep to happen. It may happen, it may not. If it does, you can get ticked in on those limit orders and then look to take profit at significant levels. Or you can use a strict risk to reward ratio, whatever you deem to be the best method for you based on your testing and experience. Okay, so definitely provides a nice risk to reward ratio, and this one does not continue fully for a new high though. Okay, so stop loss, plenty of opportunity to get that stop loss to break even here and to take partials. So let's move on to our next one. And this becomes actually our significant low here to look for a stop hunt next. And that's this entry here. Why is this one now? Here, let me get rid of this so we can actually just look at this clearly by itself. So this level becomes our new one to look for a stop loss sweep, stop loss hunt. And the reason for that is, again, stochastic, oversold, yellow over white, only looking for longs, comes over bought here. This makes it our significant low once this happens, right, up here. So this is the low to look for a sweep on, where we want to get long below this low, expecting that this is going to be a short-term little breach before continuing up, which is exactly what happens here. Okay, we get our good risk to reward ratio, Can take partials, move the stop to break even, plenty of opportunity there. Okay, so let's move on. And for this one, let's spot our significant low that we'll be looking for a stop loss hunt on. And we see that right here with this push down. We get a significant push down where a significant low is created with oversold stochastic, then overbought stochastic. And we actually do go up and down on stochastic quite a few times here, but this remains to be our most significant low, looking for a sweep down. So this is going to be the one we're using. And this one gets the sweep and heads to the upside. After profit would be taken on this one, there are other lows that could be utilized here. You can determine if you think this is a significant enough low to use, but this one would have likely been a loss here. So we can see oversold to overbought, this low. Doesn't really end up moving much out of there and then crumbles. So likely a loss on this one. We then see this switch into a downtrend. So we're looking for a significant high to sweep. This push up very clearly makes our significant high that we'll be looking to sweep. Overbought here, goes oversold down here. So we'll be looking for any push over this high as good shorting territory as long as we have our yellow below our white line. We get that push with a few wicks going up into that territory over that high. That's our significant level to look for that stop loss hunt for entries into a short position, and we get our push down. All right, to move on. And now we have quite a few highs here that are significant, which all can be utilized for stop loss hunts. So we go overbought here, overbought here, overbought here, overbought here, overbought over here, and pushes down, oversold, 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 right? So quite a few highs. This one isn't swept. This one here is swept right here. So potential entry right there for this push down. Then this high here is swept by this, which is another entry, pushes down. And then we have another sweep up here, which sweeps the high all the way over here. And we get the push down. All right. So those can all be kind of lumped together as one, as it's all just one kind of sideways consolidation there, which we'll be looking for a big move to the downside out of once this concludes and once we get those stop loss hunts underway. So this one works out nicely, and we can move on to our next one. So significant high we get right here, comes up, back down. This is our most significant push and most significant high that we'll be looking to sweep. So this comes down, and then we'll be looking for this to come back up, take out this high right here, and then continue the downtrend after sweeping that high. That's what happens. So valid setup here. Then we'll move on. Don't have any proper setups. So all the way up here are our next ones. Now on this pullback here, we see oversold, then overbought here. So what's the lowest point between these 2 points? Well, it's right here at this low. So that is our stop loss hunt low. And we see a wick down here, push right here, another push right here, all below that. Each one stopping out lows of each of these pushes down. So we kind of get multi-stage stop hunt here. And then we get our more significant move to the upside out of there. Okay. So this one also success, doesn't go too far below this initial low that we're looking for the sweep below on. And then we get our significant move to the upside. Final one here, final example. So why is this not our significant low? Why would we not be buying right here? We go oversold, but we don't go overbought here. Not a significant enough low. We don't get that much of a move out of here, never gets overbought. Now this one is our significant low. This one right here. Okay? This is the low we're looking to buy below. As long as yellow's over the white when we get our entry. We get the sweep of this low. We get the move out of there to the upside. Okay? Can take profit at different significant levels. So we have a level right here. There's a level right here. And then probably the next one all the way up here, which it doesn't reach. But partial profits, a couple points along the way, stop loss to break even by then, of course. And then it's on to the next one. All right. So that is the last example. Thank you guys for watching. And I do know that, this can be a little bit tricky looking for the right levels. And that's why you kind of need to do your due diligence and take a look at a lot of examples so that you can choose the best stop loss hunt levels. But if you do get this down, you can really get great entries and with good risk to reward ratios. So if you like the video and you're still watching, make sure you like the video for the YouTube algorithm, comment down below as well for the same reason. And if you are interested, I have an affiliate to Bybit, the cryptocurrency exchange, and that helps me out. I get a little cut of when people sign up using my affiliate link, of course. And also a Patreon page if you're interested in learning my personal trading strategy, getting weekly market update videos made by me, and also access to custom indicators and custom trading strategy scripts. All right. Thank you guys again for watching. And as we get close to the trading week kicking off, hope everyone is prepared and has a great trading week. Thank you guys again, and have a great day.